Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, with that, let's shift focus to another important corporate guest. One of the marquee stocks in India, Motherson Sumi, has actually fallen by about 20% year to date, largely been a victim of the trade war fears. Is it really going to affect the company's business and its investment decisions? For that question, we have Mr. Vivek Chaand Sehgal himself, chairman of Motherson Sumi Group. Mr. Sehgal, good morning, and thank you very much indeed for joining us. Well, really, that is the first question. The stock has optically been a victim ever since the trade talk began globally. Just tell us, does it really hamper your business? Has it hampered business in the first 6 months of calendar 2018?
Good morning, Lata. Yes, thank you very much for asking this question, because we are one company which actually doesn't get affected at all.
Oh.
First of all, we are manufacturing in all the countries where our car makers are there. So we are not into exports and things like that. The other very important thing is that in times of such kind of scenario as you painted out, we find that the opportunities to acquire companies becomes that much more, because the car makers want that much more stability. And hence, Motherson is actually a gainer, because we pick up a lot of companies which the car makers want to be stabilized in times of these kind of disruptions and things like that.
Okay, Mr. Sehgal, hi, good morning. In fact, I take your point, because, you could have an issue with car makers, but not with those providing to those cars. So, are you saying that anecdotally there's been absolutely no impact, and going forward it should not have any impact on the kind of guidance that you have given us in the past?
I think, as I said before, if anything, it's probably going to help me to achieve my targets faster. So we are quite sure that the targets are within our reach. We have a lot of companies which are already in the pipeline, and I think if everything goes fine, and our target is not just the top line, it's also the bottom line, 40% growth. So I think if both of them are met, definitely we will achieve our targets.
Morning. Just to play devil's advocate for a bit, because I think the reason people quickly start putting two and two together is that some of your marquee clients, people that you do business with, the Daimlers, the BMWs, and the Audis of the world, they have sounded increasingly cautious. Many of these companies have said that we could see some impact on our earnings, our EPS, if this trade war issue escalates, particularly with the cross tariff talk between the US and China. China being a very important market for these automakers.
Yes, I think all the things that our customers are saying are valid. So there's nothing to sort of argue on that. But please understand, Motherson grows by content in the car. So we are not really affected if the car making numbers are going down, say 5%, 7%, or something like that. We make one acquisition and we've grown already 15%. So our story has always been increase in content per car. So if you understand, we are actually quite away from these turbulations that happen in the car numbers and things like that.
No, Mr. Sehgal, if Daimler makes fewer cars and you're supplying to them, then won't that mean slower growth?
But let's look at it. What do you imagine they would grow their numbers by? So if you say it's negative 10%, but if we acquire a company worth, say, 2 billion, 3 billion, we've already grown 30%.
Okay.
So you understand it's a different thing altogether, because people are talking about numbers of car going down in a month or 2 months or a quarter or something. We're talking of a whole company coming into the group. So with that company coming in, we've already grown 20-30%. So it's really not so much of consequence.
So, sir, is there a new company coming in the group? I mean, since that's a very clear strategic bent of mind that you're sharing with us, I mean, on a more serious note, are you actually looking at acquisitions in the near future?
Absolutely. We've been saying that. We've just acquired Raydel. Raydel, in fact, we've just got the confirmation. Raydel gives you a great, explanation of what I'm trying to say. Raydel by itself is about €1 billion. So if you think about it, my last year turnover is about 10 billion. So I've already grown 10% because of Raydel coming into the group. So that's what I'm trying to say. It's not necessary for us. In fact, in our group, we actually say we don't want to depend on one particular car maker too much. So we're growing very strongly in China, and we have plants in China to support China. So whatever is the effect of China war with whomever is not really affecting us because we are talking domestic consumption over there. So, that's the way we have de-risked our business over a period of time. And we are seeing the benefits of that coming very, very clearly.
Okay. Are you changing any of your investment decisions at all? I mean, we hear Harley-Davidson is changing its investment location. Have you had to rethink anything at all in terms of acquisitions or investments?
Lata, I think, the car makers have their own compulsions and they are taking their decisions. But the key point to note is that they are not getting out of their existing countries where they are. And for a group like Motherson, if tomorrow the customer that you named takes a decision to go to, say, Europe, we are already there in Europe. So we already have a facility which is going to support them over there. So in the worst case...
I'm not asking if you will move because Harley-Davidson has moved. I'm asking if similar compulsions color your investment decisions and therefore, or even the places where you will go for capex.
Understood. Yes, I agree that yes, if a customer decides to go to a different country, different area altogether, it might necessitate for us to set up a plant there. But we don't shy away from that.
Okay. And what about Brexit? Does it impact at all? Ralph Speth was even wondering if he should continue with the investment in the UK. Are any of your sales impacted positively or negatively if there is a hard Brexit?
We've already studied that to a great extent, and we've come to the conclusion that it doesn't affect what we are doing. We have put on hold what our investment in Britain was, but that is also temporary. Okay. Because I think the moment this particular thing is cleared out, we will take our decision whether we go ahead with that or go somewhere else.
Mr. Sehgal, sir, I'm sorry, but I'm going to come back to this point on acquisitions because reports suggested beyond Raydel that you could look at one in Europe, one in Japan, and one in the US. And again, these are just reports. They said this could happen in the next 6 months to a year. Now, are these timelines even correct? And what about balance sheet strength? Because you have to digest a big Raydel, which is 1 billion. What's the kind of leverage levels? So just trying to understand the acquisition strategy in terms of how much more can you stomach? What's the appetite in terms of just debt equity? What's the target size that you'd be looking at over the next 6 months if there's something really there?
So we've never ever crossed 2.5 to 1 on debt. We have a lot of headroom there. Secondly, we have say about 6 months ago done a bond issue at 1.8%, which is probably one of the cheapest bond issues for 7 years. So, we have a lot of options open. Yes, we are very, very sure that we are going to attack our 2020 target. That would make it the 5th 5-year plan, which we have already grown to successfully. Okay. We will look at it only on the basis of the bottom line. We are a bottom line growth-focused company, so we will do it on that basis.
All right. Always a pleasure speaking with you, Mr. Sehgal. Thank you very much for joining us and clarifying